Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Linn Associates with your financial market wrap-up for the week ending on Friday, May 11th, 2018. I had a snafu this week. I know that a lot of people were looking forward to the live webinar. It was not our fault in the company. We use a product, and the server on their end, their main product, went down across the country. It's back up, but we lost the opportunity, and we were oversubscribed. In other words, we had more people that wanted to come in than the chat room or could actually handle. So we're going to throw it again on Thursday. There'll have to be a re-signing up for it. I will send out all the invites starting on Monday, so sign up for it if you want to come. It'll be a lot of fun, I promise you. So let's talk about this week because it's interesting what's going on. We're getting ready for the summit with Kim Jong-un. We are getting ready next week for the Chinese to come in their trade delegation and talk to our trade delegation about what can be done about this terrible trade deficit between China and the U.S. June 1st is right around the corner. What is the president going to do with Europe and others that are not budging at all, that I can see, on the trade deficit issue and auto issues? Now, when I say auto, NAFTA is going to be front and center this week, too. So you've got to be ready for all these different things, and there's plenty of it. The stock market rallied today again, and that's a nice rally. Some of the indices, it's one of the most consecutive days up, I think, since November. So it's been a pretty good rally. The financial stocks are still obviously in play. If you're looking at what's going on in bonds and notes, they didn't go much of anywhere today. The grain market getting hit, and soybean under continued pressure with the combination of getting the USDA report out this week of supply demand. But I think more than that, it's that Chinese are not buying soybeans when they normally do. The fall numbers the crops aren't even in, but they're not doing anything there. And products we're sending are being delayed. They get to China and they sit in the shipyards. They wait inspection. There's pressure on both sides, and this is what's called the gamesmanship. Gold and silver continue to consolidate. And let's take a look at the rest to get a feel for what's going on. So on the monthly area chart of the stock indices, you haven't been under the monthly 18-month moving average of closes since back here in 2016. Every time we break down, nothing going on. It'll take time. It'll happen in time, but I don't know when. I don't think anybody does. What was interesting is we were talking to you last week, and this was May 4th. And I said if the market continues up, you might be getting towards that 18-week moving average of closes. And that's exactly what happened this week. So the market has come out of the funk that it had. It's in an upthrust. The bias turned up because the market closed over that number. When we look at a weekly bar chart, one of the things I like to do on any chart to see is the pattern higher highs, higher lows, lower highs, lower lows, or a combination of a higher high and a lower low, which is no trend. It's sometimes hard to see, but if you put a swing line study, and I wrote this study years ago, you get to see it pretty easy. The current line always looks to see was the past week a higher high week, a lower and low week, an inside week, then take out previous week's higher and low, an outside week up or down, and I have certain rules so that I can look at it. And what I'm able to say from that is the trend is up because you have higher lows and higher highs, unless you take out on the current formation 25.91 and a quarter. So that gives you an idea from where the market is. It's about 130 points away. It's a lot of risk, don't get me wrong, but it just gives you an idea where it's at. As I already showed you, and I have said to you repeatedly, markets like to work around the 18-day or 18-week moving average of closes. It's where trends often are decided. This was an unusual break, and you snapped right back to it. And you can see you tried going down, fell back, went back to the 18-week average, slipped down, didn't break a previous low, and now you've taken out a previous high. So the bulls have temporarily gained control of the market. If they can continue the pattern, one of the potential numbers could be the 2860 level, which is against the most recent highs that we've made, in fact, all-time highs, if it has enough power to make a run to the upper Bollinger Band in the manner that it did 4 weeks ago, 5 weeks ago, to the lower band. In terms of momentum, it has turned up. So what we have is momentum is up, the trend is up as measured by the swing line, and the bias is up. In the NASDAQ, same thing. You've got the bias up, higher lows. I'm going to back off this week. This is what you looked like prior. Lower highs and higher lows. And I said to you, now the question is, do we get through this low to the lower band, or do we take out this high and maybe challenge the upper band? We took out the high. So I'll stay with what I said. Is the market going to challenge the 71.46 level? I think a lot of people are looking to see, can the stock indices keep going? In the Dow, we made this week a high that did take out 24,827. You got up to 24,847. You closed under the 18-week average. It is not the same formation. You have a lower low and a higher high. It is one of those markets that just sort of stuck here against that resistance point. And in the Russell, you're knocking on the door. You're 10 points away from an all-time high in the Russell. Yet I keep reading reports of people saying that the market that's going to be hurt the most as interest rates climb are these small caps. In other words, what's going to happen to these companies? And here it is, by far, in my opinion, just technically, if you take up all the names of the charts, it's the strongest looking. Momentum still up in this market, easiest to hit. That 1627.55 level, it's only 20 points away from the upper Bollinger Band. The VIX is slipping back into the old area that it had. You'd never know it went up to 50, and yeah, behind here is a 50 that took out some firms out of that, and now you're re-challenging it. You're also challenging the 100-week moving average of closes. The pattern is lower highs, lower lows. Momentum is down, trend is down. Does it hit 773? I'm betting not. Yeah, it's a strong bet, but I'm betting not. Be very hard to get through this whole layer of support. Not saying it can't happen. It would take an awful lot, which is obviously making new highs in the stock market and taking volatility out. Given all the things that could happen this coming week, as I've mentioned at the beginning of this, I've got my doubts. In the 10-year notes, you wouldn't feel it from the market, but the long-term trend is still bearish. Lower highs, lower lows, 118.30 potential support, momentum still down. I know you don't feel it, and the market's not feeling it. Mr. Bullard came out today, one of the Fed governors from, I think, St. Louis, and he was saying that the Fed would be better off letting inflation get ahead of the market rather than the Fed cutting it off. I think most people agree with that, but it added a bit of support to the stock market. We're in that Goldilocks environment where we have higher rates, not a lot of inflation. The Fed has told you what they're going to do. There's total transparency there, and yet the economy's still pretty good. TLT, which is the popular ETF for interest rates, still has the pattern of lower highs and lower lows. Now, if it were to take out last week's high of 119.50, that pattern would change, and we could end up with higher lows, higher highs into resistance towards 120. We'll see if it does anything there. In the dollar index, it's 2 weeks in a row over the upper Bollinger Band. Now, only 5% of the time do you stay over an upper Bollinger Band, whether it's a weekly chart or a daily chart. So there's a 3% chance next week that the market will stay over it. I use one of those percentage points to subtract when their consecutive closes over it from that 5% number. And yes, you're right in probably thinking, what if you get beyond that? Well, then you got beyond it. It's a rule of thumb, not something that's quantitative in the way that, gee, I can prove it works every time. That's not what it's about. But if you go back and you do your work, you're going to go, he's on to something. In the eurocurrency, 2 weeks under the lower Bollinger Band. It's just a flip-flop, but the trend is well entrenched to the downside. The U.S. is bent on raising rates. Europe is seeing its own slowdown, softness in different areas. Same type that we're getting in certain parts. That's why interest rates aren't jumping in the U.S. substantially higher at this point. But they're talking of how do they maybe extend the QE that's due to end in September by, instead of an abrupt end, letting it trail off in some manner. That means continued buying program of their bonds if they're going to do that. In the Aussie dollar, pretty bad news, and I think this is reflective of the Chinese-U.S. tariff war. What's going to happen? What country's in the crosshairs if the U.S. and China really go at it? Certainly the Aussies with all the materials that they send onto mainland China. In the Canadian dollar, tell me how NAFTA is going to go, and we'll have a pretty good idea what the Canadian dollar is going to do. What the Canadian dollar did do this week, and take the name off the chart, if you look at the 100-week average of closes in the green right here, it keeps holding that as a support zone. Each time it's held it, it gets back to that 18-week average of closes. I would expect no different this time. They've sort of set a date, Canada, Mexico, and the U.S., that they would like to get something into all the governments by May 17th. That is next week at this time. Why that date? Speaker Ryan, he said that it's important that they can get it through the House. I think that the Mexican government would like to get something done before the elections take center stage, and Canada would like this whole thing to get done. It's that simple. We all do. How can we lose our two trading partners yet? You've got to get something done. Our president will walk away from the deal if it's not. He's already told you things, and so far I haven't seen him break one of his campaign promises. In the Japanese yen, the market fell to the 100-week average. It slipped a couple of weeks ago, and you can see it right here. First held the 18-week, then slipped to the 100. Momentum stayed down. Then the market started slipping back. It held again, and that's where you're at right now. Again, what's the policy there? Easy money. No safe havens that people are running to just yet, and that's keeping pressure on that market that has gone straight down every week now for basically 2 months or so. In Bitcoin, we had talked about could the market get up to the upper Bollinger Band. It failed at this part. Then it went back to the 18-week average. Now it's slipping down. This is a daily chart, not the weekly. The difference in why I do this is we don't have enough new weeks yet. We're only 5 months into full trading of Bitcoins. You need more time to make a weekly chart look like anything. So I put the daily. I'd look for support to start showing up at the lower Bollinger Band. In Brent, and I'm using July Brent versus June because contracts off the board, and yet June's got all the volume for the WTI. Differential, back up to these highs right through here. Makes sense. Think about it. This is the week, it seems like it was a year ago, we backed out of the Iranian treaty, right? So the market is wondering what's going to happen, and there's a lot happening, especially this week. Israel's been attacking the Iranian outposts in Iran. Now we're going to have the, if you will, I think it's May 15th or so, there's probably going to be storming of the Israeli border by what's going on in the Gaza Strip. You should keep up with this. It's an anniversary date. Tens of thousands of people are expected to show up. Hundreds are already getting shot and hurt. It is a human tragedy right in front of our eyes, and it's going to have an impact on the markets. And when anything happens in the Middle East, oil seems to get a bid off of that. When you look at the Brent, you can see how you're running the upper Bollinger Band. Momentum is up. The trend is up. You're still doing great. You're closing in on $80 a barrel. WTI's not being left behind. As you can see, it's nearly $7 under that. But we keep producing more. And just today, they announced from Baker Hughes that we added 10 more wells that are running. So we just keep increasing the numbers. The problem for the U.S. is we don't have the pipelines to handle the production out of these basins now and get this stuff exported. I do not know why somebody isn't talking about this and getting the president's ear, that here we are, this fabulous energy country, and because of pipelines, we can't get everything done. And yeah, we're running at 95% capacity. It's estimated that the end of June, July, we could be maxed out. That is not right. There's got to be a way to make this, especially at these prices, $70 a barrel. In the Rebob gas, Do you want to be short in the summertime? We talk about it during the daily updates, and you can see the market higher lows, higher highs. Yes, you get your intraday breaks, but this is a market now that is what? Over the highs on this chart, period, going back a very far way. Remember, this is a weekly bar, so we're going back quite a ways. And you don't hear enough about it, but believe me, you're going to start hearing it very soon as you're driving and you're realizing just how expensive gasoline has gotten. Then in the nat gas, the market is sort of sitting at this 18-day moving average of closes. Momentum has turned up, the trend has turned up, and today you closed over the 18-week average. So the market is starting to respond to the possibility that we start getting hotter weather. Hotter weather will create more demand. It could be temporary. There's plenty of natural gas. Every time you hear more wells are coming online, one of the byproduct is nat gas. So you put that in and you have to wonder about it. But I write about all this. And the way my research comes out, whether you got a smartphone, whether you got a tablet, a PC, you're going to get news from me. And I write about all the markets that you can imagine. And then what I do is I'll start you off in the mornings with a video. I cover for my subscribers 40 markets in the morning with in and out trading ideas, longer term trading ideas. I write about it as well twice a day. And I do special reports. I just wrote a report on silver. I'll put the finishing touches on it this coming week. You want to get this information? Well, it's not that hard. First off, I offer everything I have in two different forms for you. Some people want only my commentary. They don't want any of the written trade recommendations. I get it. I charge extra for that. It's $60 a month. For the commentary only, you can buy a one-year subscription for $20 a month, $240 a year. Believe me, it's packed full of information. I will save you from going to all these different news sites because I'm taking it from them and I'm taking it from our own research, putting everything together with you so you can get it with or without. You can sign up to get it on our website under www.iraepstein.com. You can go to the word Ira's Research. If you haven't tried it, you might as well try my research. If you have, you're missing out if you're not doing it. Why not take yourself a prescription to it, subscription to it, whatever you want to call it. I start laughing at myself, prescriptions. In any case, you have yourselves a great weekend. As I said, I'll have a silver report out next week. I will talk to you all Monday.